How goes it all? Welcome back to Patterson Hill Properties. Hopefully, you guys have a great day. Definitely trying to get another interview in with another real estate investor slash agent. But today, I'll just be talking about specific things in regards to what's happening in today's economy and today's world. So the article that I came across the other day really caught my attention because one statement that was made from the art within the article really stuck out to me is that the real estate market, and this is true, I think most people realize it, doesn't really care about who the president is or the governor is, because even with the craziness that has occurred in Washington D.C. last week, because today it makes it an actual week, it's Wednesday, the markets don't even they didn't even blink in regards to the changing of the guards and whatnot and the government and all that good stuff. And it's all about supply and demand at the end of the day when it really boils down to it. And the article really stated that the markets react to what has the potential to make money for companies, good or bad, and what has the potential to prevent companies from making money. Also, whether they believe that there will be economic and housing market growth all at the same time. When you consider a multitude of things that are increasing, such as increase in hospitalizations due to the pandemic, unfortunately, across certain parts of the United States and the world, death rates are up, and then obviously, given the fact that the U.S. Capitol was under siege for a little bit, and the jobs report definitely was in a negative in December. We're in January right now, and I'm going to talk more about that this weekend on my other channel, Larry's Anything Goes. But given the fact that there was 140,000 jobs that were lost in December. Shows a lack of demand, and it shows the changing in the dynamics of the U.S. economy. No matter what the situation is, no matter who's in office, nothing's going to be the same ever again. We all know that. All reasonable people know that. No matter what industry you work in, or what company you own, it's just a reality. Even with a lot of darkness, there still is some sunlight at the end of the tunnel, though. I couldn't agree with that statement more because, if bond yields within the market, real estate, I mean, not even just real estate, but stock markets and things of that nature continue to go up. The article stated that we can expect mortgage rates to actually possibly go up in the near future. Now, bond yields have been going up since the beginning of August 2020, and we all know that mortgage rates have been going down since the beginning of 2020, which most people have loved and taken advantage of for those that could and those that have, hey, salute to you. The article stated that in the previous economic cycle, when the 10-year yield got above 2.62%, we had basically high mortgage rates, and demand for housing got hit because we all remember back in 2018. Seems like it was so long ago. Sales prices for new homes actually went into supply shock, given the fact that mortgage rates were at 4.75% to about 5%. Now, today, those rates are lower than that, but as the economists are predicting some sort of correction, it's on its way. Maybe not so much in the real estate, but definitely within the stock market and in cryptocurrency, because we're in the bull market now, and everybody's enjoying the good times. But what goes up must come down. Just like housing. Eventually, I think maybe within another 2 or 3 years. My prediction, I could be wrong, but my prediction is maybe within the next, by 2022 or 2023, the demand for housing might go down in certain parts of the country. Heck, I think it might go down in California if people keep leaving, and in New York. I think the housing demand in New York has already gone down significantly because thousands of people have been leaving New York City within the last year, and California is just accelerated given the fact with the pandemic and whatnot, and the dynamics of how people are living now. They want to live in cheaper areas. They want to be comfortable. They don't want to sit in a lot of traffic. They want peace of mind. So they don't want for the people that are fortunate to still have a paycheck right now. They don't want it taken, most of it taken away by the end of the month and whatnot. They want to have some money saved and be able to breathe a little bit economically. So from a living standpoint, I can totally understand that. Like I said, take heed to its states that are losing population. Anyways, you know, the article ended by going into the fact that possibility of mortgage rates staying at 3.75% if rates are properly priced. Also, given the fact that the rollout of vaccinations throughout the nation, the changing of the guard pertaining to the political power could possibly end up with more economic stimulus funds being pumped into the U.S. economy, which we all know needs to happen, which is a very good thing. However, we are not out of the woods as of yet pertaining to the pandemic. We all know that as well. Even if money isn't pushed out of the economy and the vaccination treatments are as successful, within the next couple of months, if stagnation of job growth, and that's a big key to take into consideration, if stagnation of job growth goes down and we see more jobs created, then we could possibly see more houses going on the market. Like I said, it's a prediction. I'm bringing common sense to the equation, but the simple fact that because people would feel more comfortable with moving and selling their property if they knew that they could have a job. Right now you still have a when it boils down to an eviction ban, and foreclose. Homes aren't being foreclosed upon as of yet. How long will that last? I believe it's supposed to last until February, March timeframe, but how sustainable is that for any economy? So, and I've stated in previous videos, you're going to have leases end, and landlords are going to be within the right to say, I don't want to renew because you can't pay the rent. So, but supposedly it's supposed to be rental assistance at the same time. So we'll see what happens with that. I mean, there's a lot of work that's going to need to be done on all sides. Some people are killing it in real estate. Some people are just remaining low key. It depends on the funds you have and the access to the people that you have, and be able to move forward and go from there, right? So on that note, do the great 3 free things: like, share, and subscribe. Have a great day, and as always, make money moves or live broke like a fool. Take care.